Although most leases will be recorded on the balance sheet, the initial lease classification will determine how the leases will be recognized in the income statement. Hi, I'm Priya Singleton, Quality Control Officer at Blue & Company, and in this video I'll share a little bit about the lease classification criteria under the new lease guidance. Similar to previous guidance, the new lease standard requires lessees to classify leases as either operating or finance leases. The lease classification is required to be performed at the commencement date, which is the date that the lessee has the leased asset available to use. Under the guidance, if a lessee meets any of the following criteria, the lease should be classified as a finance lease because control of the asset is essentially transferred to the lessee. The first four criteria are similar to the current guidance, except the 75% and the 90% bright line tests have been removed for determining major part of the remaining economic life and substantially all of the fair value. However, the standard states that it is reasonable to continue to use these thresholds for all practical purposes. Lessees should consider establishing an accounting policy to determine what constitutes a major part of the economic life of the underlying asset and what constitutes substantially all of the fair value for the purposes of lease classification. Otherwise, it should classify the lease as an operating lease. The guidance also adds a fifth criteria that states that if the asset is of a specialized nature, like an equipment with custom specifications specifically designed for the lessee's operations, a lessor cannot easily lease or sell that asset to another party. In such cases, the lessor would generally expect to be fully compensated for the asset over the term of the lease. This lease arrangement essentially is an installment sale. Lessees should consider establishing a policy to define what types of assets are considered of a specialized nature. It is also worth noting that the second criteria for a finance lease classification applies to any purchase option that exists in the contract that the lessee is reasonably certain to exercise. It is not just limited to a bargain purchase option. So for example, say a company primarily uses banks to finance their leases. Prior to ASC 842, these leases did not contain bargain purchase options and met all the other bright line tests to qualify for operating lease classification. However, the company always exercised the non-bargain purchase option and never returned the underlying equipment to the bank. After the adoption of ASC 842, such leases will likely qualify for a finance lease classification as the company or the lessee is reasonably certain to exercise that purchase option. If you'd like to learn more on lease classification, click on the link below and download Blue & Company's ASC 842 Lessee Implementation Guide.